The wallet doesn't care how young you are. That's the first thing you need to understand, and it's the thing nobody tells you when you're 25 with your first real paycheck thinking you've got it figured out. Depending on what you do for work, how you get paid, what you drive, and how you borrow money, the rules hitting your bank account in July 2026 are different, and the mistakes that drain you dry are different too. Right now, there are guys in every one of these situations either losing money they don't know they're losing, or about to make a decision that's going to cost them for years because nobody bothered to explain the fine print. I've been doing this long enough to know nobody explains the fine print. That's not an accident, that's the business model. So today, I'm going to do exactly that. Find the change that applies to you, listen close, because I'm not repeating myself, and by the end of this, you'll know exactly what's coming for your paycheck and what you're going to do about it. Before we get into it, if you're not subscribed, fix that right now and turn the bell on while you're at it. I'll tell you why this actually matters, and I'm not going to sugarcoat it. The people writing these rules, the banks, the lenders, the payment processors, the insurance companies, they do not send you a memo when they change something that costs you money. They just flip the switch and wait for you to find out the hard way, usually when your account's already lighter than it was last week. What I do here is take those changes before they land, break down what they actually mean for a guy your age making your kind of money, and get it to you before the deadline's already passed and the damage is already done. Every one of the 5 changes I'm covering today is already in motion. Some of you are about to feel it this month. The people subscribed to this channel find out with enough runway to do something about it. The people who aren't find out after the transaction's already gone through and there's nothing left to argue about. Subscribe, hit the bell, let's get into it. Change 1. Your side hustle just became the IRS's business. If you're driving for a rideshare app, selling on Depop, doing freelance work on the side, or getting paid through apps like Venmo, Cash App, or PayPal for anything resembling work, the reporting threshold that used to protect you dropped hard. It used to take 20 grand and 200 transactions before those platforms sent a form to the IRS with your name on it. That threshold's been gutted down to $600. $600. That's one good weekend of side work. And suddenly there's a 1099K sitting in a government database with your social security number attached to it. Here's what that actually means for you. If you've been treating that extra cash as tax-free pocket money, it never was. But now there's a paper trail proving it, and the IRS doesn't forget paper trails. The move here isn't panic, it's paperwork. Track every expense tied to that income, gas, mileage, equipment, whatever you're spending to make that money, because that's what offsets what you owe. If you're not tracking it, you're paying tax on the gross instead of the net, and that's real money walking out the door for absolutely no reason except laziness. Change 2. Your car insurance premium is not going up because you got worse at driving. It's going up because the actuarial models decided men in your age bracket are a liability, and they've got new data to back it up. Insurers are rolling out updated risk models this year that weigh things they never used to weigh as heavily. Credit-based insurance scores, how often you brake hard, telematics data if your policy has an app attached to it. If you're a guy between 25 and 34, you're sitting in the exact bracket these models flag hardest, statistically speaking, whether or not you've ever had so much as a parking ticket. What that means in dollars is premium increases landing on renewal notices that a lot of you are going to open this month and just pay without asking a single question. Don't do that. Call your provider and ask directly what factors changed your rate. Ask if a defensive driving course knocks anything off. Ask if bundling renters or life insurance drops the number. Insurance companies bank on you not asking. The ones who ask save real money. The ones who don't fund somebody else's bonus. Change 3. If you've got student loans, the grace period you've been living in is closing, and the interest that's been quietly building didn't go anywhere just because you weren't thinking about it. Payments that were paused, deferred, or on forbearance are shifting back into active repayment status for a lot of borrowers this year. And the income-driven repayment plans a lot of guys enrolled in got restructured, meaning your old monthly number might not be your new monthly number. Here's the part that actually costs people money. If your loan servicer switched your plan and you didn't notice, you could be back on a standard 10-year plan instead of the income-driven one you originally picked. And that difference can be $200, $300, $400 a month you weren't budgeting for. Log into your servicer's account this week, not next month, this week, and confirm what plan you're actually on right now, not what plan you think you're on. If it's wrong, you can request recertification. If you wait until the payment's already withdrawn, you're arguing after the money's gone, and good luck getting that back fast. Change 4. Your credit score is being calculated differently, and most of you have no idea. The newer scoring models being adopted by lenders this year start factoring in buy now, pay later activity. Those 4 installment payment plans you've been using on everything from sneakers to furniture. Used to be that stuff was invisible to your credit report. It isn't anymore. If you've got 5 different buy now, pay later plans running at once across different apps, That now looks a lot like carrying 5 different loans, even if each individual payment is small. That drags your utilization numbers around and can knock your score down right when you're trying to qualify for something that actually matters, like a car loan or an apartment lease. The fix isn't complicated, it's discipline. Consolidate down to what you can actually track. Stop opening a new installment plan every time you want a hoodie, and pull your credit report before you apply for anything big, so you're not blindsided by a number you didn't see coming. Change 5. If you work a job that involves tips or overtime, the tax treatment on that income changed this year, and depending on where you fall on the income ladder, that cuts one of 2 ways. It can either put more money back in your check, or trigger new withholding calculations that shrink it. Some tipped and overtime income now qualifies for new deductions, but the eligibility rules are specific about income thresholds and job classification, and payroll departments are not always updating their systems correctly or on time. That means some of you are overpaying withholding right now on income that qualifies for the break, and that money doesn't come back to you until you file next year, if you even catch it. Pull your last 2 pay stubs and compare the withholding on your tipped or overtime hours against what the new rules say should be happening. If your employer's payroll system hasn't caught up, that's on them to fix, but it's on you to notice, because they're not going to chase you down to hand back money they didn't need to take. So here's the recap. 5 changes, 5 things to actually do about them. If you've got side income coming through any payment app, the $600 reporting threshold means the IRS is watching now. So track your expenses and stop pretending that money is invisible. If you're paying car insurance, call and ask exactly why your premium moved, because new risk models are quietly padding your bill, and asking questions is the only thing that pushes back. If you've got student loans, log in this week and confirm your actual repayment plan, because a servicer error can silently double your monthly payment. If you're using buy now, pay later on everything, consolidate it down, because it's now visible on your credit report, and it's dragging your score exactly when you need it clean. And if you work tips or overtime, check your withholding against the new deduction rules, because payroll mistakes cost you money you won't see again until tax season, if ever. None of these changes are the kind of thing that show up on the news with a headline that makes sense to a normal person. They show up as a slightly smaller number in your account and a shrug from whoever you ask about it. That's the whole game. Nobody's coming to explain this to you in plain language, because there's no incentive for them to. That's the incentive for me. Subscribe, turn the bell on, and send this to the guy you know who still thinks buy now, pay later doesn't show up anywhere. It does now, and he's going to want to hear it from somebody instead of finding out from a denied application.